Hello and welcome to Master Budget Part 9. In this section of the Master Budget, we're going to create the balance sheet, which is our last budgeted statement that we're going to do. Previously, we created an income statement, cash budget, sales budget. The balance sheet budget starts with cash. Now, the cash is going to come from our cash budget. So we're going to go up and pick up our ending cash balance. Either one of these is fine. Accounts receivable is going to come from the sales budget. I think it was the sales budget. When we did the cash receipts, we then figured out over here. Do you remember? We did the cash receipts and we said, okay, here's March's sales. We subtracted the amount that we were going to collect in March, and what we hadn't collected became our accounts receivable at the end of March. And that should say 3/31, not 12/31. And then inventories. Now we've got two inventory items. One is direct materials. And if you remember, when we did the purchases budget, the direct materials purchases budget, right here, we calculated what we wanted as our desired ending inventory. And the desired ending inventory for the quarter, which was the desired ending inventory for March, is 3,528 pounds. And so we're going to bring that down, but we need to then convert that into dollars. And the way we do that is we take the number of pounds times, and we're going to go over to our assumptions. And remember, in our assumptions under inventory and production assumptions, we had an assumption that said that our direct material was going to cost $1.40 a pound. So we hit enter on there. And then the next item in our balance sheet is finished goods. And in our production budget, we determined what we wanted our desired finished goods to be. And here's our production budget, and we said desired ending inventory for the quarter, which was the same as the end of March, was 1560. So we wanted to have 1,560 units. 1,560 units available at the end of the quarter, and we're going to cost those out. So equals times by our cost of goods sold, or cost of goods per unit that we calculated when we did our income statement. I'm just going to format this so that they fit in the cell, and then bring those over. So we've got our cash, accounts receivable, our inventories. I'm going to add my two inventories together. So we've got one inventory number. And then using auto sum, I'm going to total our three current assets. And we have current assets of $107,729. Now then, equipment. Normally, we might be purchasing some equipment. Now, in this master budget, we didn't purchase any equipment. So all we have to do is go back up to our balance sheet and pick up our equipment that we had at the beginning of the quarter. If we had purchased any, we could then add it to that. But since we didn't purchase any, our equipment is going to be the 100. Now, accumulated depreciation, we're going to start putting in our equal signs, go back to, and I'm hitting Control Home to get back to my balance sheet, go back to my balance sheet and pick up accumulated depreciation. But we did have some depreciation charges during the quarter, so we're going to have to add those. So I put in a plus sign, and I'm going to go over to my overhead budget, my production overhead or manufacturing overhead budget. And in my manufacturing overhead budget, you'll notice we had depreciation. And I need the whole depreciation for the quarter, so I'm going to pick up the quarter number. And if you remember, we also had depreciation in our selling and administrative budget. Down here we had depreciation. Again, I want to pick up the quarter. So that's my accumulated depreciation. And to get my net property, plant, and equipment, I will take my equipment minus, remember we subtract accumulated depreciation, and so net property, plant, and equipment is $62,500. I'm going to add my total assets plus my net property, plant, and equipment, and my total assets are $170,229. Now we're ready to do liabilities and stockholders' equity. Accounts payable, we calculated when we did our cash budget. And our accounts payable, and this should say 331, was $5,214. And the way we got that is we have our cash, or our purchases for March of $74.48, and then we collected the current month of $22.34, and the difference gives us our $5,214. So we bring that down. Common stock, we're going to pick up beginning balance. Now we didn't sell any additional common stock or issue any additional common stock, so we still have $20,000 in that account. And our last account is retained earnings. Now, retained earnings, remember, is all the earnings that have been kept in the company since the company began. So it includes all the net income minus the dividends. So we start with our beginning again. So I'm going to control home, go back up to my balance sheet, and here's my retained earnings at the beginning of the period. To that, I'm going to add my net income for the period. And if you remember, we didn't have net income for the period. I'm going down to my income statement. We actually had a net loss, so it's going to reduce retained earnings for the period. Okay, I'm going to add those two together to get total stockholders' equity. And when I add that to my accounts payable, I will get total stockholders' equity. And you will notice that the total assets equal the total stockholders' equity. And this is the last test of our budget. If we can get our assets to equal our liabilities plus stockholders' equity, then our budget is working correctly. I hope these demonstrations have helped you in the preparation of a master budget.